Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Good everyone, thanks for tuning into the Smart Property Investment Show. Phil Tarrant here, your host, back again with another instalment of podcast for property investors. Thanks for joining us. If you're new, if you've just found us, welcome. We have no agenda or anything with this particular show. It's about giving and delivering real life information to Aussie property investors so they can make more sensible and more intelligent property investment decisions. So thanks for joining us on this journey, and keep tuning in, and we'll cover off hopefully everything you need to know about making the right investment decisions. Where I want to take the podcast today, and it's something that's very popular with our listeners all the time, and we get a lot of feedback on it via editor@smartpropertyinvestment.com.au. People want to know what's happening in the different markets, and I'm quite conscious that as a journalist, I'm fortunate that I get to speak to pretty much anyone I want to talk to in property and get their views and opinions on what's happening, whether that's centred around lending or the current Royal Commission underway, looking at banking, whether it's about specific markets, whether it's about taxation issues and accounting type issues, or longer term strategy stuff. I'm very fortunate that I get to pick up the phone or get to sit down with anyone and get that information. So my job as a curator to hopefully try and translate that information that I pick up and synthesize in the way in which I can deliver it to you, so you can help make those better property investment decisions. So it's a privileged position, but by no means do I consider myself an expert. So I do lean on the views and opinions of people that do this day in, day out. I'm just a conduit to try and get it out of them. So today I'm fortunate to welcome to the studio, or back into the studio. You might have heard him a couple of weeks ago. We did a Q&A session talking mainly around regional towns. Simon Pressley, who's the Managing Director of Propertyology. Simon, welcome back.
Always good to have a chat, Phil.
So we spoke when we got together, and go and have a look at the feed where you're listening to this particular podcast right now. It's probably about 2 weeks ago. I can't remember exactly, but we touched on regional markets, and some of the stuff we were chatting about was some perceptions or blinker perceptions around what people think on regional markets, i.e. it's harder to sell your property in regional markets. They don't go up and quickly as value. There's a lot more issues. You get worse tenants. And I think we dispelled a lot of that stuff. But you said something during that chat, and we focused on a little bit. You used Hobart as an example for how regional markets might compare to metropolitan markets. Now, some would argue that Hobart is a regional market in terms of its size, right? Yep. It's not a massive place, right? There's
11th biggest city in Australia.
11th biggest city in Australia. So, that comes behind all the capitals and probably stuff like Parramatta and some places. So it's a smaller market, but it has all the trappings of being a regional market, a metropolitan market, and it has the same fundamentals which property investors need to be looking at in terms of what prompts price growth and good yields and stuff. So you said that back in 2014, you identified Hobart as a solid market. It was at a point in time when it was sort of going backwards or nearly backwards, and that's performed really well subsequent to that. So what I want to try and do today, and we'll get into the other states, but I want to pick up your observations around the Hobart market, because I've been hearing about it a little while. I know people who have done well down there, and done well being they've picked up good properties that have gone up in value, and the holding costs aren't too significant. But the question is it too late to get into Hobart? Is it done? Were the smart people there 4 or 5 years ago and they're now left and moved to the next Hobart, wherever that is? Or is there still legs to run in that market?
We're done there,
Okay.
but that doesn't mean the market's done by any stretch. Between early 2014 and would have been early 2016 for memory, Phil, Propertyology would have bought very close to 100 properties.
Okay.
The market was flat for most of that. We'd started to see growth just before we stopped investing there. We picked it by focusing our research and understanding property economics more so than property data. So we're able to take advantage of picking the best properties. We negotiated some pretty good discounts off list prices when you're in a flat market that you're not competing against anybody. And we backed our judgment that the economy is going to improve. We always knew that supply was already tight, even though that stuff's not reported in the media. And the economy did improve during that 2-year period while we were buying there, and then that started to show through in property activity. We stopped investing there because that's a lot of properties that we've bought, but also we feel we've discovered a couple of other equivalents to
So the next
Hobart's.
The next Hobart.
But it was getting very difficult to to buy in that market. So our buyers agents, active in that market every day, were starting to miss out on properties quite regularly. They were starting to see emotional and less educated investors paying over odds for properties, and we won't do that for our clients. But we could see the writing was on the wall. And when we looked at number of properties listed for sale, number of buyers active in a market, and how quickly they were selling, and this is, I guess, a combination of looking at raw data, but also acting in the market yourself. You feel these things. We could sort of see this, it's going to get hotter, so we stopped buying there. But it is hotter now than what it has ever been. Now, every market will come to an end at some point, and we've seen Sydney and Melbourne have just recently done that after about 4.5 years. We can't see the end of Hobart. It will be out there somewhere. It certainly won't be 2018. It might be 2020. We don't know. The metrics that we measure, there is no end in sight. It's a bit like if we wound the clock back to 2014 and said, when will Sydney's boom finish? You couldn't have answered that question, could you?
No.
You couldn't see it. You knew it would come at some point, but with history on our side, would say, well, geez, it probably still had about 30% growth left in it back then. Maybe that's where Hobart's at. Our clients that we got in the early stages have already seen somewhere between 30 and 40% growth, and potentially it's only right in the middle of its cycle. The real pleasant surprise for us is rents have grown by 25% in the last 12 months. So already we've got the capital growth, and the cost to hold was only, even if you borrowed, say, 90% on a property, clients were probably only having to find $2,000 a year to hold the property. But over the last 12 months, that's become significantly cash flow positive. Vacancy rates are at an all-time capital city record low in Hobart, about 0.3%.
Okay, it's low.
Really low.
Yeah.
And there's nothing on the horizon to suggest how that's going to increase. So, that is really exciting, and I'd say rare for property investors. The economy is really solid. I mean, they had a state election last month. The incumbent government got re-elected. That's generally a good sign for property markets, because what it means is the people who've already got their feet under the chair don't need to run around and design plans and then take 2 years to do that and roll it out. That government already has those in place and can continue to roll them out. There's a lot of really exciting infrastructure projects there. Agriculture's going crazy. Tourism's going crazy. International student market is really, really big. So, I think it's the biggest Australian property market success story in probably 20 years.
And you're going to say that because you found it before everyone else and you're out of that market.
Well, Sydney and Melbourne...
All your clients are now realising the benefits of
No,
that.
I think Tasmania as a whole, it just doesn't get the airplay that it deserves. Forget property market for a minute. The state was in recession in 2014.
Yeah.
And it's now one of the best economies in the country.
Well, credit to the to the state government. They're obviously doing something right. But I think one of the biggest criticisms I get on the Smart Property Investment Show is that if I talk about states and locations, that if I forget Tasmania, get a lot of Tasmanians.
Well, we made up for it today.
You get a lot of Tasmanians calling in, sort of giving me a hard time. But that said, for those Tassies, keep quiet, because if you're a property investor and you're investing in Tassie right now, a lot of people are going to do well out of it moving forward.
Look, big call, but 2018, by the time data's released in early 2019, we may see Hobart record a 20% price growth in 2018.
That's huge.
Here and now today, it's probably over the last 12 months grown by about 15%. That's as strong as Sydney and Melbourne ever saw at any stage in their 4.5-year boom. There's hardly anything for sale in Hobart.
So people, you pay overs now, because there's a lot of investors down there, and I'm going to say they're probably less sophisticated investors, as in someone without the depth and skill. And
it's actually more the locals, which makes this market more sustainable.
Oh, okay, that's good.
So only 25% of property transactions were to investors in the last 12 months. Sydney and Melbourne sort of saw 50 to 60% of property transactions to investors. So when you've got owner-occupiers transacting, whether it's a first home buyer getting in the market or an existing owner-occupier, upgrading or something like that, that is a really sustainable market, because it's local sentiment that's driving that. It's local confidence.
And they're going to be sticking around. And when you see, and we've spoken about before on the show, when you see the makeup of a suburb shift from potentially being owner-occupier orientated to investor orientated, that's when you get big shifts in markets. But to a point you made, the delineation between property economics versus property data, the fact that and I imagine it's one of your indicators, Simon, is the consumer sentiment. So if locals are happy to be upgrading their property and potentially buying more expensive property, because that's the nature of the market, that shows they're pretty happy with where they sit right now in terms of jobs growth, confidence in the state government to maintain growth, infrastructure development. So they're all property economic stuff. That's
Absolutely.
not property data.
Yeah, the locals are very confident, as they should be, because they've got a lot of security in their job. More and more people are relocating from the mainland to live over there, whether it's because it's much more affordable. The NBN is actually a lot faster over there than here. And you think about how jobs have changed these days. We don't all need to come into an office or a factory. So more people are sort of going, Tassie's got a beautiful lifestyle, it's got very affordable housing, and it's got high-speed internet, ticks a lot of bloody boxes. Yeah. So more and more people are relocating for that, and that's providing a very solid floor for that property market. One of the other reasons we can't see when this growth cycle is going to end is because when we look at the building approval volumes, they're still really low. Okay. And for something that was approved today, it's generally 18 months to 2 years before it's built. So volumes are still low now. So that suggests that supply is going to be tight for at least a couple of years.
So you're talking about supply and demand, factors or forces there. So it's hard to find stock now, and there's not going to be too much more stock coming on, therefore putting positive pressure on price growth.
Yeah, and you think of what other options investors have got in capital cities. Run through the 8, and it's big tick for Hobart and lots of question marks against the other 7. How further out
because Hobart's built, it's a harbour city in many ways. Yeah. But how much further can it grow out, Hobart? It's reasonably restricted land base.
It is. I mean, it's an island, but Australia's an island too. At the end of the day.
But the capital city itself, Hobart. So.
Yeah. Well, all of Tassie, not just Hobart. It's restricted. Lots of forest over there. Yeah. But if you think from an investor's point of view, that's a good thing, because there can't be. There's a limited amount of land supply that can take place to go and build all these estates. The other thing is there's massive height restrictions in Hobart. It's a very conservative state. They consider a high-rise to be 7 stories, and I'm not joking. Yeah. There are a few approvals for international hotels over there, and they've had a lot of controversy from locals because they want to go 20 stories, and one of them's been declined because it's too high.
I don't think anyone's allowed to be higher than the brewery there, right? Isn't that
pretty
a badge of honour?
But if you think from a property investor's point of view, and you think Brisbane, Sydney, Melbourne, where we've seen a lot of supply come through, through high density living, that's not going to happen in Hobart.
Okay, so it's not too late, but
it's a hot market. So if you want to get into that market, it's a very exciting market. You need to be realistic. You try to play games with purchase price and expecting big discounts. You'll be blown out of the water by 20 other bidders. Yeah, okay. And you could be taking 6 months to get in.
And if you're a Sydney-based, Melbourne-based, Brisbane-based, Perth-based, South Australia-based investors, do you need to get down there and have a look at it yourself, or can you buy off realestate.com or domain.com?
Either way, you need to do your due diligence, whether you go there and do it yourself or you pay someone else to do it, but you still need to do the due diligence. Okay,
fair point. All right, so that's Hobart. So I think well observed from Simon. I'm not going to offer my opinion whether or not I think it's a great market or good market, indifferent market, because that's not my job. I think I've extrapolated some pretty good info out of Simon there for you to make a decision that is most appropriate for you. And remember, just by a disclaimer, occasionally I do it, we're just talking generally around property, so none of this constitutes advice in any way. It's just a general chat, and before you make any decision, make sure you speak to the relevant financial professional, whether that's an accountant, a mortgage broker, buyer's agent, financial planner, about most of them.
All and sundry.
But everyone's circumstances is different, and where you invest, how you invest, and the timing of your investments and how big your portfolio gets going to depend on the decisions you make today and where you want to go in the future. And there's always a lot of noise around the need to diversify as a property investor, and rightfully so. Diversification means many, many different things to many different people. Might be diversification of asset classes, so you have some shares, you also have some property, and maybe you got some fine art or some wine or whatever. That's one level of diversification. In property, diversification might be houses or units. It might be the state you invest in. It might be the lenders that you use. It might be when your interest only variable rates turn into fixed rates, or P&R, principal and interest. So there's so many bits of diversification, and you need to be considering all of them. But when you look at location, to load up as a property investor, and if your aim is to be building a large property market, you shouldn't be putting all your eggs in one basket, one state basket. So if you're in Hobart right now and you've got in there and you've used sort of 3-4 years, like many of Simon's clients, you've probably done well, but it's probably worth looking elsewhere to see what else is hot and what is not. So let's quickly go around the ground, Simon. Just your views and observation on some of the other capitals. We touched on regional markets beforehand, and the last time we got together, and you outlined the key fundamentals that you should be looking at, as in diversified economic bases, propensity for growth, attracting new people, universities, government spending, infrastructure, etc., etc. So I won't go back on that. Let's stick on the capitals. Start in Melbourne.
Start in Melbourne, okay.
Let's start in Melbourne. For how long?
3 consecutive months of mild price declines. I think that's the definitely the defining moment, showing it's the end of the cycle. It's more likely to remain flat for some years. I mean, don't ask me how many that is, but a solid economy is likely to prevent major price falls that a few economists might have tried to scare us about. I can't see that happening. Could property values fall in general? Yeah, they could, but crash? No, I don't.
What's
I don't think so.
Falling and crashing?
I think double digits is probably a crash, isn't it? But it's quite common that any market, including capital cities, can drop a few percent. Once every 6 or 7 years. That's normal. Melbourne and Sydney could do that. I think Sydney, I'll probably have more concern about than Melbourne. Pockets of significant new supply of apartments. That's not to say every apartment in Sydney. I think both Sydney and Melbourne are going to be flat for some years, but potential for pockets of Sydney with lots of new apartments coming in. Parramatta's one, where you could see in excess of 5% price decline in a calendar year, sort of thing. And that's not catastrophic.
Yeah.
But it could be a concern if you bought at the top of the market in late 2016 and
at 90%.
At 90%, and you got $30,000-$40,000 a year holding cost. You probably wouldn't have minded your $30,000 or $40,000 a year holding cost if you could afford that, but the property was going up by 10% a year.
Yeah.
But if you're sitting on that asset and it starts reducing a bit in value and is likely to remain flat for some years, that's going to concern some people.
See, Parramatta's an interesting case study, and it could be Parramatta, it could be anywhere really in any capital. It's a big satellite city itself within Sydney. It's bigger than Adelaide, I believe, and also obviously Hobart. So it's a big city, but that in itself is going through a massive transition right now. And you're talking about a lot of apartments going in there. So with Parramatta, it's a centre of city, number one. Number two, you have an evolving cultural footprint, so the people attracted to Parramatta are bringing with them different ways of living. They don't all want a house on a quarter-acre block with a picket fence. They're okay with vertical living. So Parramatta at the moment is going through a massive transition, and as more properties come online, at a point in time there isn't a demand there to support price growth, and you've just outlined how that works. At a point in time, though, Parramatta, not to say Parramatta isn't a good investment opportunity, Parramatta at a point in time will again become a great place to be investing in. It's probably just not right now.
Absolutely.
So it's understanding where is the best place to spend your money at this point in time, and what you're saying is that Parramatta, Sydney, is probably not the best place to be getting the best bang for your buck at the moment.
Look, the best time to invest, not that anyone has got a crystal ball, but the best time to invest is in anticipation of a growth cycle commencing, not at the end of one. So for anyone out there who can afford to invest today and is motivated to invest, I'd suggest that Sydney and Melbourne, you would cross those off your list. That's certainly what I'm doing. I'll cross those off my list. There will come a time in the future when they'll be back on our list, but it's certainly not now. Back to Melbourne, though, something that will be interesting to see how it unfolds. Come 1 January just gone, the Victorian state government introduced a vacancy tax. Now, the Victorian government's estimation is that there's 20,000 properties in Melbourne, not Victoria, in Melbourne. We're not just talking inner city apartments. We're talking all dwellings, houses, apartments right across the entire city. They estimate there's 20,000 of those that are empty deliberately, and they want to do their best to force all of them back on the market, either to be sold and bought by someone who wants to live in it, or to be put as part of the rental pool. So each year, those empty properties, if they can't prove they've received an income for 6 months or more, they'll be taxed. And you're talking several thousands of dollars every year. So that's only been in play for a couple of months, but it'll be quite some time before those property owners get given that bill. So it might be might be 12 months away before we see the impact of this new piece of legislation. But 20,000 properties is a lot of properties, isn't it?
All coming on the market.
Yeah.
Yeah.
Whether they come on the market to be sold or whether they come on the market to be rented out, either way, it's not going to have a good impact on prices or on rents.
So this is the role of government, though, in changing property economics, because we're talking about property economics here, supply and demand,
We've
right?
had too much change, haven't we?
You know, that's a lot of properties coming on the market, and depending, I don't know the geographic split of those. I imagine they're sprinkled right across Melbourne.
All over,
right?
all over
so it's not
the city.
clustered anywhere in
No.
particular. I imagine there's probably a lot of apartments, Docklands Way or in a city where you probably have maybe a bigger cluster of vacant properties, and they might just be offshore investors holding them. But interesting. Let's cover that off when that happens and see if there's any.
Will be interesting. Yeah.
You know, I know you guys will pull the data on it. So yeah, that'll be good. I wonder if Sydney's going to do something like that. There's been a noise around it across most markets, but I think a lot of the stuff that's taken place over the last couple of years in trying to take the heat out of property markets, like you know, APRA lending requirements and you know, changes to the way in which banks are lending to investors or at higher rates, and the requirements in terms of LVRs have changed a lot. So things have softened a lot. So all those levers that the government and the regulatory bodies have pulled has had an impact on the market, and Sydney and Melbourne have
and it's a lot of change in a short period of time. Too much change.
Yeah, and that needs to wash through right now. And I think even now APRA is saying, yeah, things seem to be taken hold. Banks now are starting to, you know, they're starting to look more favourably at investor lending again.
Yep, they're reducing rates to
to entice investors. So, you know, this is markets go up and down, sideways, left, right, up, down, however it is. So, you know, this is the cycle we're in right now. So, to Simon's point, for investors, Sydney and Melbourne, long term, are they great places to hold investment properties? Absolutely. We've got plenty in Sydney and Melbourne, and over time, they're going to be great investments for us. But we're not buying in Sydney and Melbourne at the moment because our money is best spent elsewhere to get a better bang for a buck in terms of investment results. So let's head up north from Sydney then, Brisbane. It's going to go, right? Everyone's saying Brisbane's about to go. There's so much interstate migration. The disparity between Sydney and Melbourne prices is so huge that just the market will force price growth. What do you say about all this?
I would say if I had $1 for every time I'd heard that statement, I would have been able to pay cash for a property in Sydney, probably. When Sydney was going through its boom, you know, in the early stages, 2014, now Propertyology's phones were ringing red hot. People saying, "Oh, help us invest in Brisbane. It's going to boom," and we kept questioning. Hope you're right. Our family home's in Brisbane, but why is it going to boom? Playing a bit of a game with us. Oh, because Sydney has and Melbourne has, so therefore Brisbane must next.
Yeah.
It's not a common cold. Markets perform differently for different reasons. Fortunately, we didn't put all those people in Brisbane. Guess where we put them, Phil?
Down in Hobart.
Yeah. And the same rhetoric's been thrown out. Brisbane's going to boom. Brisbane's going to boom. What it's lacked has been job growth.
Yeah.
That's what Sydney had. That's what Melbourne still does. That's what Melbourne has. That's what Hobart has. That's always been the primary driver of all markets. What we did see in the back half of 2017 is job growth improve in Brisbane. A fair bit of that is still government-related jobs. So, you know, the small businesses, I guess they're still showing signs. We're not quite confident yet. Let's hope that changes, because it is ripe for the picking if the economy can pick up. Queensland is a big resources state. Coal, gas, and when you get further up Mount Isa, lots of precious metals.
That wealth flows into Brizzy, though?
It does. And look, I remember back during the mining boom, fortunate enough to have a meeting with Brisbane's Lord Mayor. Now, Brisbane City Council is Australia's biggest city council, and so during the boom he said, "Simon, don't underestimate what mining does for Brisbane." Now, when you're in Brisbane, you don't see coal or gas, but this is his words, not mine. He said, "Simon, for every one job that might be in a place like Dysart or Moranbah or Emerald or somewhere like that, there are 9 white-collar jobs in Brisbane CBD."
To support that one job.
Yep. So the BHPs of the world, you know, the bean counters, the managers, the HR people, they're not in Moranbah. They're in Brisbane.
So they all work in mining. They just happen to wear a suit and sit in a tall building somewhere on the river.
So when coal prices died, what we heard is Moranbah's property price crashed. But whilst that was happening, what also happened is all these offices in Brisbane became empty. Commercial office vacancy rates are about 18% in Brisbane CBD still. So the economy is improving, but it's mild improvement.
So again, this is back to property economics.
Absolutely.
You're not going to get this information in property data.
It's not in data.
No.
But there's a lot of interstate migration, 20,000 people a year leaving Sydney, for example. Maybe the biggest driver of that is housing affordability. They want to go somewhere where it's affordable. I mean, if Brisbane can get their act together with the economy, nothing wrong with their weather, nothing wrong with affordable housing.
You're Brisbane-based, aren't you?
I'm Brisbane-based, yeah. I mean, I've got a vested interest. I'd love to see Brisbane boom.
Yeah.
But it hasn't yet.
What's your take, and you might not want to answer this, but what's your view on the local state government? You think they're doing a good job up there?
No.
Okay.
In a word, no.
Send your hate mail
But,
to...
I mean, you can say that about lots of state and
true.
federal governments, you know, in the red team and the blue team. Let's not get started on politics.
Okay. No. Well, I was going to ask you about South Australia. They just got a new government in there recently in March. So anyway, let's finish with Brizzy. So Brizzy doesn't show you the fundamentals that you need to see in order for it to show. Brisbane
has some solid underlying fundamentals, provided we avoid the inner city apartment market. I think it's been well documented.
Yeah.
There's a little bit of an excess supply, but nothing too bad. If it can get its economy right, and unfortunately the infrastructure pipeline in Brisbane isn't spectacular.
Yeah.
If it can get the economy right, if it can get local confidence going, the Brisbane market could do really well.
What do you think of the belt? So when I talk to people investing in Brizzy, they typically invest in two areas. It's 3 areas. Logan Shire, Ipswich way, and then up north along the
Moreton Bay.
Up Moreton Bay way, so the train line that goes up through Cullingha and all that sort of stuff. Where we've got some, and you got the new big university precinct heading up there. What do you reckon of that place up there? Is that all those good infrastructure? It's good reason for big university coming in there. There's going to be a lot of job growth. Blah blah blah. Is that pretty reasonable up there? Is it worth looking at?
Yeah, I mean the three local councils you mentioned there, Logan, and there's another one, Redlands as well. I mean they've all got their merits, but I guess it's no different to Sydney and Melbourne. You need to pick your right street, and you need to know not just what supplies in the immediate vicinity now, but what can't you see when you're driving around. Zoning changes, and you might be driving down a street and think this is predominantly houses with a few six-pack apartments, but there might actually be approvals in place for a couple of 10 or 20-storey apartment blocks.
It's changed a lot recently in some of those areas, hasn't it?
And it changes all the time. Yeah. But those locations are all okay, but the missing link has been jobs. It
all comes down to proper economics, jobs and job growth, wage growth, obviously very important fundamentals you want to see when you're investing in property. So South Australia, so it's got a new government, 15, 16 years, I believe, of a Labor government. The Liberals are in. They seem pretty happy with the guy they've got in there to lead the state into its new future. Jury's out. Let's see what happens. It's a long time for a sitting government to sit there, and South Australia over the years has done some great work in terms of attracting industry for job growth. It has some issues with closures of some car factories and stuff like that, but they're very big in defence right now, and there's a whole bunch of work about to start happening down there at a point in time. What's your view on South Australia?
Look, it's been very much like Brisbane. It's sort of had low single-digit growth probably since about 2008's GFC. I think probably a bit more of the same. One thing about Adelaide, it's a beautiful city. It doesn't do apartments well at all, but it probably doesn't need to, because property is so affordable. Detached houses are so affordable. There are plenty of parts of Adelaide where you could buy a reasonable house for high 300s to up to $500,000. So why buy an apartment when you can get a house at that sort of price? So someone investing in Adelaide, be cautious about in the city where they have been trying to build some more apartments in there. But generally speaking, I think Adelaide's going to have more of the same, which is, if you think about it, that's better than Sydney and Melbourne now. It certainly wasn't over the last 5 years. It has had a very subdued economy for a long time. I don't have an opinion on the new government. It's wait and see what proposals they roll out over the next 12 months. But Adelaide's an affordable market, solid yields, doesn't have the oversupply concern that some of the other big cities have. So nothing wrong with Adelaide at all. Okay.
Perth, I think last time we got together you said it's probably flattened out now. It's not going to go any further backwards.
Yeah, we've all been waiting, when's it going to hit the bottom? I think late 2017 it did hit the bottom. But just because of I think a lot of people confuse bottom with bouncing. I think, like property markets aren't tennis balls. They can hit a bottom and bounce, but they'll do that for a reason. And there's plenty of markets that hit a bottom and stay flat for a long period of time. And Perth's economy, has stabilised, but we don't see it expanding. It's still heavily reliant on iron ore and to a lesser extent gas. And the big players in that space is BHP and Rio Tinto. We follow them closely, and they're not talking about spending billions of dollars on new projects. So until they do, the mining sector is not going to pick up. It's picking up in New South Wales and Queensland, but it's not picking up in WA. Perth needs to diversify its economy. I think its opportunity is tourism. But yes, the most recent tourism data that came out for 2017, Perth was the only capital city that saw a decline in international visitors.
Okay.
That's really concerning because tourism is Perth's opportunity. It really can do something there. It's a beautiful city. It doesn't seem to have a strategy in place.
Well, I was actually just looking to book a flight to London last night and for a trip in May, and I could actually book the Dreamliner now out of Perth.
Direct flight.
Sydney, Perth, London, 17 hours, Perth, London, which is a good old hike, but hopefully that might help with some tourism. If that's the gateway now for most people arriving in Australia, you think they'd probably want to stick a couple of days around in Perth and check it out. It's a beautiful place.
The new Perth Sporting Stadium, we shouldn't underestimate how much influence that can have on the sentiment of a city. We were just talking about Adelaide.
Yeah.
When they redeveloped the Adelaide Oval, it's now one of the best sporting stadiums in Australia.
Yeah, it's a great place to watch cricket.
Absolutely. Yeah. That did wonders for local confidence. So whilst the South Australian economy was still subdued, there was a real spring in people's steps for a good few years from that. So hopefully Perth's new stadium, which is now officially opened, you'll see that on the screens, right throughout the AFL season. Hopefully that does something.
So springs in step or
concrete
in steps?
I wouldn't be investing in Perth. It's good that the market appears to have bottomed out. Vacancy rates are still 5.5%. There's still a heck of a lot of stock on the market.
Yeah.
Rents are still falling. They're not good ingredients to invest in.
So we spoke about Parramatta being it's a satellite city, part of Sydney, but it's a big city compared to Darwin. Darwin is a tiny town, right?
Darwin's about 100,000 people.
Yeah, so it's like a regional hub in many ways. I hope I don't get any hay mail from that, but you look at some of the regional centres there; they're just as strong as what, in terms of population, as what Darwin would be. It hasn't had a very good couple of years.
No, and I'm really worried. We're going to in the first half of this year do a research report on Darwin. It's a sad story, and I'm disappointed that we haven't spoken about it. I've heard no one mention it. Forget property for a second.
Yeah.
Darwin's a territory in its own right. It's just as important as New South Wales, Victoria, Queensland, and everywhere else, but I've heard absolutely nothing about it. It's had 3 consecutive years where retail trade has declined. I've never heard anyone use a recession, but if that doesn't define a recession, I don't know what is. Apartments have probably dropped by about 20% in value the last couple of years. Interstate migration figures, when we look at that, they're leaving.
Going backwards, yeah.
The economy, when it's reported as an unemployment rate, Darwin sounds okay because it's always a low rate. But the thing is, Darwin's quite a transient city. A lot of people get transferred there on a high-paying salary for a 3 to 5 year contract. Yeah. And if that contract's not renewed, they appreciate the unique lifestyle you can have up there, but then they go back to where they come
Cashed
from.
up and buy a good investment property.
Yeah, and there's just no infrastructure project. There's nothing to keep people there. So the unemployment rate is still low, but that's because people aren't looking for a job there. They've left. It's quite concerning.
Yeah, it is concerning. So from an investment perspective?
Look, you could have a double-digit decline in the next 12 months.
So that's
Darwin.
a crash?
Yeah.
Okay. All right. So I don't know if this has been doom and gloom. Has this been doom and gloom?
No, I don't think so.
No. So it's always a good time to invest in property as long as you're investing in the right spot.
Yeah.
Okay. So I'm going to finish up, Simon, but I think one of the clear delineations and if you're tuning into this, the difference between property economics and property data, big difference. Most investors look at property data. They don't consider property economics. Yeah. And it's pretty sophisticated.
The data's the stuff that's readily available online. The core logics throw it out. It's interesting. We're always keen to know, did our markets go up or down and that sort of stuff. Auction clearance rates create drama.
Yep. Headlines.
But all the property data is, I call it the rear vision mirror stuff. It's behind us.
Yeah.
So if you're looking to invest today, what happened yesterday and last year is completely irrelevant. We don't have a crystal ball, but the next best thing to it is understanding all the employment-related stuff. And it's and the art. Well, we think it's an art. Our methodology focuses on picking locations where we're confident that an economy is going to improve. So that's not in property, data. Some of that is data, might be jobs data. It's more than unemployment rate, though.
Yeah,
I will add.
and I might get you back on the show to talk about this, but just to finish up, I'm quite interested in the approach that you guys take to look at the market. So do you look at a market and then try and prove or disprove its investability based on the overlay of all the stuff that you look at? Or do you say, here is all the stuff that's important to us, you put it into a big box, you shake it up and it goes, bing, this is where you need to be looking. How does it work?
Yeah, like it's a whole pile of information. There's probably, I'm happy to come back, there's probably about 20 different major factors that we look at.
Yeah.
You're never going to have a situation where all 20 are positive. And there's no such thing as a perfect market.
Yeah.
But it's forming an opinion about each of those, let's call it 20 different metrics. And it's either going to paint a positive, a neutral, or a negative picture at the end of the day. So we are crystal balling, but isn't that what investing is?
Yeah, very much so.
It's just more educated than being a DIY. But the most important stuff is in the economic side of things more than the historical property data.
Yeah, okay, good point. Simon, appreciate the chat again, mate. Thanks for
My
coming
pleasure.
back on. And
My pleasure.
You obviously like listening to Simon, and I do appreciate the feedback that's coming in.
Propertyology.com.au.
Oh, there we go. There's a little plug. I'll let that one go through the keeper. No, check it out. Simon, I know, and I've been on his website. They provide a lot of reports and stuff. So if I was you, I'd go and check them out and get some free information. It's pretty good stuff. Any questions at all for me or even for Simon, I'll pass it on. Editor at smartpropertyinvestment.com.au. Remember, check us out, like us, follow us on social media if that's how you like to get your info. Just search Smart Property HQ. And if you're not subscribing, like tens of thousands of other Australians, to our morning market intelligence newsletter, so you first know what's going on. There's plenty of great resources on it. smartpropertyinvestment.com.au/subscribe. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.